As of 2013, 58.4% of Volusia County property owners pay only 13.5% of the total property taxes levied in our county. The taxable value of these properties are $50,000 and below. This is because of exemptions like Save Our Homes, 2 homestead exemptions, portability, etc. That means the remaining 41.6% of property owners are stuck with 86.5% of the property tax bill. How do you feel about charging fees for services to replace some or all property taxes, which could be more equitable?
Well, first of all, thank you for inviting me to have the opportunity to speak to your listeners and to the people who are going to be watching these videos. I happen to be one who supports doing something about increasing fees as opposed to taxes, and I'll give you a good example. I think the next council will have to be dealing with the fire fee issue and the fire services tax. We are tapped out on that, and we are into our reserves, and we've got to find alternative methods to pay for fire services, and certainly a fire fee is one example that I think we'll be exploring. And if there are others, I'm open to those as well.
Why did the county need to raise property taxes this year over 5% when the total of all fund balances at all times has been a minimum of $391 million and a maximum of $461 million for the last 4 quarters? Also, it is recommended by accounting principle and standards that reserves should only be from 10 to 15%.
Well, first of all, I did not vote for the millage fee this year. We had about $9 million that we were sweeping out of funds that we could have used to offset a millage increase, and I voted. So I voted against the millage. But I think perhaps what we're talking about apples and oranges, because when we talk about those two numbers, the $391 million and the 461, that's not a reserve account. Those are the funds that come in November and December from tax bills that go into short-term notes and draw interest. And in fact, on the $391,000 one, we drew a good $391 million. Excuse me. We drew about $692,000 in interest payments against that. So that actually helps to offset some of the taxes. County reserves. And the emergency reserves on the operating budgets are all within 10% with our general fund. Libraries at 7.6%, mosquito controls at 10%, Ponce Inlet Port Authority is at 9.7%. So they're all within, the emergency reserves are all within the right number. And there are other designated funds out there for projects that are perhaps pending. For instance, on Ponce Inlet, we have future capital for land purchases. That's part of the money that goes into the reserve, but the actual emergency reserves are well within where they should be.
ECHO funds were tapped again recently without any involvement from the advisory board. Why?
Well, you know, I'm a big supporter of the ECHO board. Stony Sixma is my representative to that board. They do a fabulous job. We, however, are trying to get ahead of the curve on some off-beach parking issues that we need because of the sand that's declining from the beach and issues with off-beach parking. And so we've taken the position that we have discussed that program generally with the ECHO board, and that to now go back and to take each individual purchase to them just delays a process in a real estate market that's highly volatile. So we've assigned one of our staff people, Jamie Seaman, to be our surrogate out there collecting information on properties and making offers. We let the ECHO board know, but as far as making the final decision, that rests with the county council. And I think the ECHO board understands that in that particular area that it's in the interest of the county to move those projects forward while we can get the good value. They certainly have every right to be involved. They just processed some recommendations on the other part of ECHO that we adopted unanimously. But this is about $5 million in reserves that we'd like to stop reserving it and actually get it back to the taxpayers. So I think that's probably a good mix for us to do it this way.
When the total of all fund balances for the last 4 quarters has been a minimum of $391 $91 million and a maximum of $461 million, why should we borrow $20 million to give it to companies like the Speedway?
Well, as I had previously said, those dollars are actually taxpayer dollars in reserve for future operating funds, and so they're really not available for $20 million. But I will tell you that $20 million, I know it's a controversy, but I'm convinced that when we've looked at the numbers and we go out every year, we are going to break even, and then in year 5 we actually start making money for the taxpayers. Unlike what the city did, and they're keeping their funds specifically within that big CCD that they created, our funds will be are for public infrastructure, and then any funds that come in as a result of what we've paid out that are over and above what we've paid out, they'll go back into our general fund so that everybody in the county, all the taxpayers, are going to benefit from that. The Speedway is putting about $600 million into a project across the street and another $700 million into this project. That's an incredible investment, economic investment in our county, and our $20 million goes to help with the public infrastructure.
West Volusia lacks the high-paying jobs that people travel to in Lake Mary and Heathrow. Seminole County also benefits from the property taxes the corporate businesses pay along the I-4 corridor. If Volusia County is going to attract high-paying corporate jobs to West Volusia, the I-4 exit 114 interchange is the last undeveloped tract of land that can realistically take place and be convenient for corporate businesses. How do you see the development of this land taking shape over the next few years? Can you see development such as the new Verizon building in Lake Mary? Can you see that here in Volusia's future? And what do you think would be most beneficial to Volusia County residents?
We absolutely have to make sure that that interchange development is of the highest quality we can get there. It needs to be the next Lake Mary. And I just recently had a conversation with one of our big realtors here on the east side, and who does business in Central Florida, and we talked about that interchange particularly. And he assures me that it's the next one poised for development. The good thing is that we've got water to that, we've got utilities to that, we actually have an interchange, which we didn't when I first lived over in West Volusia. There was no interchange there. That interchange has been added. We're talking with the Florida Department of Transportation about extending Rhode Island across from Orange City over into the Deltona market, which will open up more roadways. We're poised. We have unified ownership on several of the parcels. There's a couple parcels where we have some issues, but mostly it's unified ownership. And so those parcels, those landowners are ready and willing to work. Deltona has economic development interest in there. The land on the northwest corner has interest, and Orange City has made sure that they have their part of the pie on the southwest corner, and so they're all working together. We are ready when it comes our way. We are ready to take advantage of it, and it has to be high quality development, just like in Seminole County.
Name 3 things that are priorities if you are elected.
Jobs, jobs, jobs. And then it would be water and then transportation, because if you don't have a good water supply, quantity and quality, and if you don't have a good transportation network, you're never going to get the jobs. And so we really need to focus on all 3 of those. We need to focus on how we create good paying jobs, and one of the ways that we do it is making sure we have an infrastructure in place, both with our water and with our transportation network.